Industry attractiveness is determined by 5 forces, which form the industry structure. 1. The intensity of rivalry among existing competitors in the industry. 2. The bargaining power of buyers, in other words, the industry's customers. 3. The bargaining power of suppliers to the industry. 4. The threat of new entrants into the industry. And finally, 5. The threat of substitutes to the industry's products. Collectively and individually, these forces have a predictable impact on industry profit. Let's now explore that impact in detail, focusing on the intensity of rivalry first. Intuitively, intense rivalry erodes prices and escalates the cost of competing in the industry. So, the resulting impact on the industry profit equation is predictable. Price decreases, cost increases, therefore, profit declines. Next, let's explore the impact of the bargaining power of buyers. Powerful buyers demand lower prices and insist on more value in the product. So the resulting impact on the industry profit equation is clear. Price decreases, cost increases, thus profit declines. Next, let's analyze the impact of the bargaining power of suppliers. Powerful suppliers charge higher prices and insist on favorable business terms. So, while price is unaffected in this case, cost does increase, leading to profit erosion. Now, let's look at the impact of the threat of new entrants. A credible threat caps prices and stimulates investment in higher barriers to entry by the industry incumbents in order to deter new entrants. So, the resulting industry profit impact is predictable. Price decreases, cost increases. Therefore, profit declines. Finally, let's understand the impact of the threat of substitutes. A credible threat caps prices and compels improvement in relative performance versus substitutes by the industry firms in order to prevent substitution. So the resulting impact on the industry profit equation is familiar. Price decreases, cost increases, thus profit declines. So, to summarize, the 5 forces determine overall industry profitability, and thus its attractiveness, through their impact on industry prices and costs. Furthermore, they highlight the critical point that competition for industry profit is not limited to direct rivals, but encompasses all 5 forces, each trying to maximize its own share of industry profit. Competitive advantage with its 2 main types leads to 3 generic strategies. In order to describe them, we'll structure a 2x2 strategy matrix. On the horizontal axis, we'll plot the 2 types of competitive advantage: differentiation and low cost. On the vertical axis, we'll plot competitive scope, which refers to the range of industry segments, activities, and geographies targeted by a firm, varying from broad to narrow scope. This mix of competitive advantages and scope results in 3 generic strategies. 1. Differentiation, which combines a differentiation advantage with broad scope. Following this strategy, a firm seeks to be unique in its industry along specific dimensions widely valued by buyers. 2. Cost leadership, which combines a low-cost advantage with broad scope. Following this strategy, a firm sets out to become the lowest-cost player in its industry. And finally, 3. Focus, which combines a differentiation or low-cost advantage with narrow scope. In fact, the focus strategy has 2 variants: differentiation focus and cost focus. With differentiation focus, a firm seeks to be unique in its target segment. Likewise, with cost focus, a firm sets out to be the lowest cost player in its target segment. Let's demonstrate these strategies through examples from the auto industry. First, BMW exemplifies the differentiation strategy because it produces premium engineered cars with a wide model range for a broad scope of auto segments. Next, Toyota typifies the cost leadership strategy because it makes low-cost cars for the mass market. Next, Porsche epitomizes the differentiation focus strategy because it produces highly distinctive performance cars, specifically targeting the sports auto segment. Finally, Tata Nano, the Indian car brand, exemplifies the cost-focused strategy because it makes very low-cost cars, purposely targeting low-income buyers. Next, let's determine the elements required to enable a chosen competitive strategy. Now, let's learn how to perform break-even price analysis. Just like with volume, in order to determine break-even price, we'll need to identify 3 data variables. 1, the total volume of a product, which is typically based on a period sales forecast. 2, the unit variable cost of the product. And 3, the total fixed cost associated with making the product for the period of time. Next, we'll plug the variables into the break-even price formula, which is also very simple. Specifically, we'll find the sum of the unit variable cost on one hand and the total fixed cost divided by the total volume on the other hand. The fraction part of the formula may at first appear complex. However, upon a closer look, we'll see that it is nothing more than the fixed cost per unit. So, in essence, the break-even price formula is nothing more complex than the sum of the unit variable cost and the unit fixed cost. So the break-even price will be equal to 50 cents plus $20,000 divided by 40,000 units, resulting in $1. Now that we've learned how to perform break-even analysis on the revenue side of profit equation, let's switch to the cost side. The next line on the income statement is operating expense. It represents the cost incurred to run regular operating activities. Operating expense is also known as OPEX and SG&A. SG&A stands for selling, general, and administrative. In fact, that is how we can segment total operating expense into selling, general, and administrative expenses. Furthermore, selling expenses can be subsegmented into advertising, promotion, and commission expenses. Likewise, general expenses can be subsegmented into personnel, infrastructure, and depreciation expenses. All other operating expenses typically fall into the administrative category. So, in order to reduce operating expense, we can reduce selling, lower general, and trim administrative expenses. When doing so, make sure to prioritize the biggest expense category for reduction. Our final learning point in this tutorial is that overall capacity is a function of individual activity capacities. Recall from the strategy module that any business creates value by performing activities, which collectively form its value chain. Here's an example of the value chain for a cookie firm, with activities spanning R&D, sourcing, production, distribution, and marketing. Each of these activities have their own capacities, which form the firm's overall capacity. Note that while these individual capacities are not cumulative, they are interdependent. Specifically, a constrained capacity in just one activity will limit capacities in all other activities, and as a result, constrain the overall capacity of the value chain. In other words, overall capacity is only as high as the capacity of the weakest link in the value chain. Therefore, in order to analyze ways to increase capacity or to explain a capacity decline, we must always first segment the overall capacity into distinct components, and then explore on an individual activity level where the capacity opportunity or problem lies. As the name implies, the pricing triangle helps triangulate the optimal price by combining all of the methods that we've just learned. The rationale for the pricing triangle is that the best price is rarely achieved by using just one pricing method alone. So the first step in the pricing triangle is to determine a cost plus price, or a present value based price for a financial product. The reason that a cost plus or present value price is at the bottom of the triangle is that it typically represents the minimum price level. The second step is determining a competitor-based price. And the final step, if applicable, is determining a substitute-based price. As a result of combining these pricing methods, we'll be able to triangulate the price that takes into account the cost or the intrinsic value of a product on one hand, and the competitors' and substitutes prices on the other hand. Now, one might point out that the pricing triangle takes into account only the firm setting the price and its competitors and substitutes. What about the other major party affected by price? The buyer who pays it. Specifically, how is the buyer's price sensitivity taken into account? That's what we'll discuss next, because understanding and accounting for buyer price sensitivity is key to effective pricing. The second step in structured case analysis is to form a hypothesis that answers the primary question, identified in the previous step using the SCQ structure. A hypothesis is a probable answer to the primary question, based on business judgment and initial data. In other words, forming a case hypothesis requires the ability to combine our business acumen and the opening case facts to develop what we believe is a reasonably likely answer to the primary question. Let's now form a hypothesis for our CPG client. Firstly, we know from our general knowledge of economics that profit has two drivers, revenue and cost, one or both of which could have driven the profit decline. Additionally, we know from the specific case facts that the client competes in a highly competitive market. So it is reasonably likely that, due to the competition, the client's revenue has declined, leading to the profit decline, which forms our first hypothesis. Now, it is also possible that the client's cost has increased, causing the profit decline. However, there is nothing, at least in the initial case data, pointing to that, making a cost increase a weaker initial hypothesis relative to the first one. In fact, when we have several hypotheses, we should always prioritize them based on how well they are supported by initial data. So by combining our business judgment and early case facts, we can state that our initial hypothesis is that profit has declined due to a revenue decline. Note that the more specific a hypothesis is, the better, because it helps to devise equally specific and thus efficient analysis to test the hypothesis. If we struggle to form a specific hypothesis, we must improve our case understanding by asking facilitative, clarifying questions that we'll describe next.